Here's exactly how multi-million pound portfolios are built. Most people think becoming a millionaire through property takes decades, risky flips, or just dumb luck. Well, I've built a multi-million pound portfolio to over 20 million pounds of value, and I'm going to show you exactly how I did it step by step. Number one, capital. Now, it doesn't need to be yours. It can be loans, savings, equity, or joint venture money. What you need to understand is that your money is going to have a limit. Your network is your net worth. But ultimately, most people watching this, and if you're in my situation, it's going to be from some savings that you've got, maybe ISAs, maybe a bit of pension release to get you on that investment journey, or indeed refinancing your own home. There's hidden equity and money to be made there. Number two is understanding that it's compounding. Compounding assets are absolutely key. Buying smart properties in the right area with long-term capital growth. And you might already have access to that already. And finally, consistent execution. People fail not because it doesn't work, but because they stop. Honestly, there's so many people at the start of my journey where I was sat there on the same course as them, and I was sat there going, they're going to absolutely smash it. Smarter people than me, they seemed hungrier than me, but actually they were like that burning the candle, go, 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 and they burnt out and stopped. And then what they do is this shiny penny syndrome. Oh, maybe I should just do Bitcoin. Maybe I should do this. I promise you it works if you don't give up. Now, you don't need to become a millionaire to build a £1 million portfolio. You just need strategy and consistency. So if I break down exactly how 100K turns into $1 million in 8 to 10 years, and by the way, if you've got 100K, I can turn it into a £1 million portfolio in under 10 years and triple your net worth. I know, big promise, let's break it down. So let's say you've got that 100K, and our strategy is all about being conservative, boring, vanilla buy-to-lets. Will we do a refurb? Yes, we'll do a bit of a tart-up on the property, but we're not looking to be aggressive in this situation, and we're definitely staying away from BRRs. They are high-risk strategies. If you don't own your first boring vanilla buy-to-lets, don't look elsewhere. That's the shorthand for you right now in terms of investment strategy. Let's say the average property price is 120 grand. We're going to put down a 25% deposit, which is 30 grand, plus we're going to add in around 10% as a buffer. So that's 10% of the 120 grand. That's going to be your fees, your stamp duty, etc., which is another £12,000. So that's £42,000. This is obviously going to depend on your area, by the way, but our average property in our gold mine areas are usually around 130,000, 120 to 130. So your rental yields that you can expect are going to be around 6 to 7%. So what that means is that your annual income, your rent over the purchase price of the property, 120 grand in this example, is going to be between 6 and 7% on that. And so what that equates to on a £120,000 property is £7,200 at 6%, or at 7%, we're going to look at £8,400, and that's your annual rent. Now, capital growth in the UK is really, really crucial towards property investment. So just so you understand how this works, the average capital growth in the UK over the long term is 7.9% per year. Now, does that mean that every single year it's going to go up there? No, but since the Doomsday Book in 1086, that's almost 1,000 years of evidence, it has averaged that. Now, does the past guarantee the future? I think we know the answer is no, but I'd say 1,000 years is a good indication. Now, when you buy property, it's going to go up some years, down some years, shoot up some years. And in the last 10 years alone, I've seen minus 1% in 1 year. I've also seen 15% growth in 1 year over my portfolio. So you take the rough with the smooth, knowing that it's going to average out to that point. So let's be conservative here and say this 120 grand property actually only grew at 5% average over the next 10 years per year. Well, that means that year one, that 120 grand property has gone up in 5% value, which is £6,000, plus we're going to have around £250 a month net cash inflow. Now, what does that mean? Cash flow or inflow is when money's coming in after paying all the bills, 250 quid per month is in our pocket. You might be thinking, well, that's not a lot of money. Well, let's actually look at that as a return on investment. Because if we invested our 42,000, which is what we put into this property theoretically, into the stock market, even if you made 7% return on that, let's see how that compares. Let's say 8% return, which by the way doesn't really happen in the FTSE, but let's say it did happen. Well, let's compare this. You've got £250 a month, that's £3,000 a year. And then on top of that, you've got your 5% capital growth, which compounds year on year. But year one, 5% on 120,000 is £6,000 plus your £3,000 in profit. That's £9,000. So that £9,000 is a decent return. But when you consider you put in 42,000, that £9,000 represents over a 20% return on your investment. And by the way, the capital growth is tax-free, which we'll talk about accessing later. Where else can you get a double-digit return on any investment, let alone in something as safe as houses? Literally. Number 3, and this is the big section, having the millionaire mindset. So when you like to introduce, and by the way, what happens, and this is where your growth really increases, what happens is as that capital growth builds up, some people go, yeah, but how do I access that money? Well, every 2 to 5 years, depending on how long you fix the mortgage, you're going to remortgage the property. And what this is you're going to get a new set of finance on that property, and then you're going to release it and invest again. Now, I'll give you a little bit of a pitch here, because we actually do this for investors. And so if you know you've got 100 grand to invest, you want to build your portfolio, but you don't have the knowledge on making sure you get these in the right area, which is absolutely key, then I can do it for you. And if you want, put portfolio, that's portfolio, in the comments below. I'll send you a link and you can have an absolutely free one-to-one strategy session where me or my team will help you document the journey that you need to go on, give you guidance, and if we can support you to do that, then we'll do so. Portfolio in the comments now. The thing is, if you actually extrapolate this, by the time you go on, and I won't go through this from now to now, even if you started with 100, within a 10-year period, you would very likely have between 6 and 8 properties. Now, let's say at that time they've doubled in value, which by the way is the average situation in the UK over the long term. Let's say that 120 grand property is now 240, but this conservatively say you now own 6 of them at 240. You go, no way would they go up that much. Well, historically, that's exactly what's happened. So 6 times 240, to see if I could do this in my head, is 1,440,000. That's not the important number. Let's say they still go up 5% capital growth. Yes, you're now getting 6 times the cash flow, which will be loads more than that money, £250, but also 5% of 1,440,000 is 72,000. That is how much your net worth is now going up without doing anything every single year. And let's say those 6 properties are bringing in 350 a month cash flow, which will be way higher, by the way. You times 350 by 6, that's 2,100 every single month. So honestly, with 100k invested today in the smart way, in the right deal, not the cheapest deal, not in a shit area deal, not I'm doing a big refurbishment deal, the right deal, within 10 years from today, you will be financially free from that 100k investment. The next thing you need is a bulletproof mindset. So you need to understand that there's 4 filters of a smart investor. So first of all, does this deal fit my goals? That's really important. There's no point investing in something if it doesn't align to what you're trying to achieve. With Boring Vanilla Buy-to-Lets, I'm looking to make every single person that invests with me a net worth millionaire. And yes, that includes you. I will make you a net worth millionaire if you invest in me. And by the way, it's your portfolio, you keep it. I'll just help you achieve it. Number 2, will this property hold or grow its value in 5 to 10 years? Biggest mistake that I see newbie investors doing is they buy cheap, shitty properties in the wrong area because they're obsessed with maximizing their cash flow, only to realize 10 years later it's worth the same or less than they even bought it. Because capital growth, by the way, just because it's an average, it doesn't mean every area of the UK goes up in value. Look at most areas of the Northeast, not all of them, a lot of areas in the Northeast, and you'll see what I mean. Number 3, does it create options? Does it create an option for me to refinance in 5 years? What if I needed to sell it? If I needed to hold it, what are the opportunities? And Number 4, this is the single biggest one. Can this portfolio compound without me? And that is why it's absolutely pivotal to make sure that you're investing in property in the right area as the number one concern. Millionaires aren't obsessed with just buying, they're obsessed with buying right. Now, the key thing here is, what type of investor are you? If you're thinking this all sounds amazing, but I don't have time or experience to do this, I could barely find time to actually watch this video, that's what we're here for. And yes, this is a shameless pitch for myself, but we do a bloody good job. I started Aspire Portfolio around 8 years ago to help me build my own portfolio. We realized we were really good at it. Friends and family started getting involved, and now we've serviced over 1,000 individuals. And that's pretty cool. So if you want to build your portfolio where you can massively reduce the risk and invest 0 of your own time, that's where I can help you with the sourcing, the opportunity, negotiation, the legals, the financing, the refurbishment, the lettings, and the refinance 5 years from now. We literally do everything hands-free. And if that sounds like you and you've got your money to invest, put Portfolio now, and I'm going to open up some free one-to-one strategy sessions which you can have with me or one of my team to book in and isolate the journey that you need to go on. Now, it's key that you have your goal, have the 4 pillars and the principles we spoke about in this video. And if you don't remember them, go back and watch them. But if you're ready to take action, then take the action. Either watch these videos, make sure to subscribe to this channel right now, make sure to hit the notification bell and watch the videos, educate yourself so you can do this on your own. But if you want to get it right, and maybe it's only for the first couple of properties, then let's work together to deliver that goal. Put Portfolio in the comments. You can book in a free strategy session, no pressure whatsoever, but I'm really excited about having a chat and maybe helping you build your portfolio moving forward. I hope this has been valuable for you. If it has, you know what to do. Hit the like. If you're not subscribed, hit subscribe. Don't miss out if you're getting value from this. And I'll see you in the next video.